Hello friends, welcome to the Weekend Investing Weekly Review for week ended 9th of May, and the war is on. I think it was not intended to be a war but just demolishing terrorist outfits, but the counter response from the other side was so intense that it has resulted in drawing us into this war. And as wars are, it's very difficult to say how long and what kind of damage this may inflict. So this is certainly serious affair going forward, how and when this conflict will end. From our research desk this week, we had all these fantastic pieces of knowledge and information to share with you. Please go through our blog, our newsletters, the Weekend Investing app, wherever you wish to read them or see them in video format, and you can get this information. Disclaimer as always, please read it fully and understand it, and do subscribe to the channel if you haven't so far. Nifty this week dropped significantly at the very start of the last day on Friday, down 1.39% for the whole week. So not too much damage, but yes, on the last session we had some nervousness given that this escalated, and perhaps next week we may see some more downsides, is what I suspect going forward. So we have now a down candle on the weekly after four up candles. So that's not such a bad thing actually. And maybe we'll find some support in this region right here. Overall, markets look reasonably robust. The current situation, of course, can escalate further and make it a bit difficult in coming times. S&P 500 is absolutely flat, 0.47% negative, in fact, for this week. So not really going anywhere. Fed has not changed the interest rate stand, and that's what markets were waiting for. Maybe it will happen in June. Recession calls are at 50% probability, so that also is not really going anywhere. Gold made a comeback this week. In rupee terms, gold was up 3.72%. So coming from nearly 94,000 to 97,000 nearly on a 10-gram basis in the Indian context. Dollar index is also firming up. It's once again above 100 at 100.42. So I think flows towards India, flows towards emerging markets, and especially foreign flows towards India, given the war situation, are going to certainly stop. Let's hope that they don't go on a selling spree right now. But as of now, the flow seems to be again moving towards the dollar uh, for this last 1 week or so. In benchmark indices, we had Nifty fall down about 1.39%. Nifty Next 50 fell very sharply at 2.95%. Nifty 500 at 1.5. Mid caps were the best index this week, minus 0.72% only, and small caps fell down 1.78%. In the sectoral overview, we had real estate losing a lot of ground, minus 6.6% this week. PSU banks losing 4.4%. Tourism losing 4.8%. And you also had banks overall losing 2.8, financial services losing 2.5, and public sector enterprise also losing 2.6. The only gainers were media and autos at 1.5%, and defense stocks also moved up 0.7%. If we see the 12-month view on this chart, you will see that we have defense and capital market really doing well in the last 12 months, along with, you can say, financial services. And then you have private banks do 14%, pharma doing 14%. The real losers in the last 1 year have been real estate at minus 12, energy stocks at minus 13, and PSU banks at minus 11, along with media stocks. In the sectoral momentum score basis, defense is at the top. You have private banks, financial services, and capital markets below that. But in the very short term, they are losing ground. In the very short term, autos are picking up, media is picking up, You have IT stocks are picking up in the very short term, and you also have MNC stocks along with some FMCG counters pick up in the very short term. But over a longer term average, the top sectors have remained to be defense, private banks, financial services, capital markets, and infrastructure. And on the flip side, you are seeing that real estate, PSU banks, media and energy, along with PSCs, these have remained the worst performers for this last 1 year gone by in terms of average performance on momentum score. In the weekly advanced decline stats, very poor advances this week, 28% on Nifty, 18% only on Nifty Next 50, mid cap and small cap near 30%, micro cap 35%, and CNX 500 also 30%. Very poor advances. Of course, declines were more. The percentage of stocks outperforming benchmarks uh, in this 1 week were Nifty Next 50 was leading with 54% Nifty Next 50 stocks outperforming Nifty Next 50. On the Nifty, it was 46%, and others were between 40 to 50% as well. So, roughly about entire market, about half the stocks are outperforming better than benchmark, and half are below it, which is absolutely the average normal in this last 1 week. If we were to see last 1 year, uh, this is none of these indices have any even 50% of stocks outperforming. So it has been a tough year for most indices where most of the time larger number of stocks have not outperformed the benchmark. Very few have. In terms of market cap segment wise, dropped from 52-week high. The same statistics continue week on week, where Nifty you can see is concentrated in the top two brackets of under 10% loss from the top and 10 to 20% loss from the top. So 64% of Nifty stocks have dropped less than 20% from 52-week high, whereas in Nifty next 50 mid caps and small cap space, you can see the significant part is here, which is basically 20 to 40%. For instance, 58% of Nifty next 50 stocks are here, roughly 52% mid cap stocks are here, and 53% small cap stocks are here. So, more large cap, not even large cap, actually, Nifty stocks have fallen less, whereas everything else in the market has fallen 20 to 40% on an average basis. And micro caps, the segment is actually 30 to 50%. It is not 20 to 40%. Largely, uh, the average here 53% plus is 30 to 50% drop. So the pain is very obvious in the market. But is the trend improving or declining? So these are the percentage of stocks in CNX 500 that are above the 50-day moving average or the 200-day moving average. And we are seeing that the percentage of stocks, let's say both in 50-day moving average is also coming down last many weeks, and in 200-day moving average is also coming down last many weeks. That's telling you that the trend is not strengthening, rather it is just consolidating here or actually coming off. So 50-day moving average, we had reached 84% stocks above 50-day moving average on 24th of April, but by 9th of May that figure has come down to 49%. So a lot of stocks actually went up, but they are now dipping, and the 200-day moving average actually had peaked only at 32%, 33%, which is very poor. Out of 500 stocks, only 33% stocks above 200-day moving average in end of April, and now only 24%. So that's pretty weak signs from the market. In the trend check within sectors, you can see private banks have significant number of stocks above 50-day moving average, along with financial services, autos, energy, FMCG, infrastructure, oil and gas. All these have decently more than 70, 80, 90% stocks above 50-day moving average. On the lower side, on the 50-day moving average, IT stocks are extremely poor in trend. Metals are very poor. Real estate, media, pharma, all these have done worse than the CNX 500 figure. On the 200-day moving average, you have again financial services, private banks doing better than 50%, and rest is all between, let's say, 24% and 50% right here. FMCG, autos, commodities. and IT, metals, energy, PSCs, pharma, real estate, all below 200 DMAs in terms of the trend and percentage of stocks above 200 DMA. So stocks that are not above 200 DMA, ideally, if you are a trend follower, should not be there in your strategy, or if they are there, then at least have some sort of an exit plan for those stocks. In the FII DII stats, we saw the first big day of selling at nearly 4,000 crores on 9th of May, and that came after 3 weeks of FII buying. So this is now a change of trend, and likely this will continue till at least this conflict gets over. This anytime any conflict is there, overseas investors are the first to feel fearful, uh, and that is quite natural, uh, as instability and basically markets or investors not liking uncertainty is the reason why foreign investors would sell first. Domestic investors have picked up the selling and bought handsomely on 9th of May at nearly 7,000 crores. So the counterbalance is very much available. In the cumulative activity in the last 1 month, FIs net have still bought 16,000 crores and DIIs have bought 37,000 crores on a net basis, and hence over the last 1 month we are doing all right. That's the take on the weekly report. Let us know if you like this content, or if you would like us to add any more statistics or remove some of them in case that is not making meaningful sense for you. The idea is to give you a snapshot of the market for the week gone by, and basically I hope that our defense forces can conclude the operation quickly and all to come home safely, and let's see where we go next week. Thank you. Bye-bye.